the highlights of the Asian session, the only thing to note that is compared to the other sessions, it is fairly slow, very, very slow. All right. The main market participants, usually at that point in time, are commercial banks and companies and central banks. So during this time, the liquidity for most pairs stick within a range. It's almost predictable, because you have very few players. So within a range, it means it just goes up and down, up and down, up and down, up and down, which is very normal of the Asian session. Okay, so the reason why people like, some people still trade it, but I don't. I keep away from it. But then what happens is when the Asian market trades like that, okay, at night it'll be like that. Maybe it'll shoot up a little bit, then it'll come back. Okay. Then what would happen is in the morning, just before London opens up, then it will slow down, slow down, slow down. And then as soon as London opens, then the activity begins, and so on. So this time here, this is where, for me, I take advantage of that. Okay. Now, for those of you who have subscribed to my sniper trading group, this is what we take advantage of. We take advantage of this consolidation here. Okay? When the markets consolidate like that, it means when they start moving, regardless of where you are, whether you have set up a trap over there or you set up a trap down here, the market will move. And what you're saying is, when it moves, you want to be in there and you want to make money. That's why the sniper trades that I am teaching and I am providing for those who are interested, normally is a sure guarantee because I give them 5 currency pairs, which is basically 10 trades. And at minimum, first 5 must be triggered. Okay. And after triggering, some might go and take profit and come back and trigger the other side. So usually I set up, 5 trades or 5 pairs. And when I get results from those who are doing it, they tell me, oh yeah, of my 5 trades we set up today, I have like 6 getting profit, or 9 or even 10. Like the video in the group today that we shared, where somebody, made about 300 pips from that session. So the Asian market session normally is very small, it's very slow, but if you time it properly, when the London market opens up, you can make a lot of money in that process. Okay, the breakout. Okay, so most of the action takes place early in the morning, okay, when the economic data is released, which means that you want to trade early enough when the market starts moving. Okay. All right, next slide. The European session. Now, the European session has big highlights. One, it is the busiest session of the 3 sessions. Okay, and busiest in the sense that it is associated with 3 major things. Okay, which are one, high liquidity. Okay, low transactional costs because the markets are moving a lot, and lower pip spreads. Okay, due to large volumes of transactions that take place, it is considered the most volatile session. So if you want to make money, you trade the European session. Well, I always say, call it the London breakout. Most traders begin the trading during the London session, as You can see there. Okay, that's when most people start. And trends can sometimes reverse at the end of the European session. So you find that trades might start going up and up and up and up and up, and towards the end, maybe they start going down. They're losing steam. Why? Because of the big bankers are pulling out. They're shutting the banks. It's called banking close. There's even a strategy on that. Okay, around 3 o'clock, 4 o'clock, when banks are closing, the liquidity changes and the markets might tend to change direction. So that's a lesson for another day. But just know that the European session is the most liquid, most volatile. You want to be in that. New York session. This one is also considered high liquidity because, of course, the US banks have lots of money. The beauty about this session is it overlaps the European session. Okay? So most of the euros and the USD and Canadian dollars, okay, move a lot during that time. So because 85% of the trades involve the US dollar, okay, then there's a lot of movement around that time. Okay, all right. 1 second. All right, so we'll go to the next slide. There's what we also called types of brokers. There's a dealing desk and an undealing desk. But I guess at this level, I don't want to get into the details of the types of brokers that we have. That's probably a discussion, a little more detailed discussion that we can get into some other time. Right now, I just want to give you the overview that can give you the ability, the overview that you need to know before you can get into the Forex market. Okay. So let me see, next slide. Okay, how to choose a broker. At this point, I'll give you the overview of how to choose a broker. For most things you want to look at, even these foreign brokers, there are a few things you just need to look at very quickly. Okay, one is the trading platform. For now, I'm suggesting, yes, there's MT4, MT5, all those are very popular, but I'm suggesting you download CTrader. CTrader is much easier to use. Okay, much easier to use. I might show you if we have time. Then look for a broker that allows you minimum deposit and the one that allows you the currency that you want. Okay, I normally like to deposit my money in USD because USD is the most popular, so I use USD. So the broker that I choose must use USD. Then some brokers provide deposits, bonuses on sign up, okay, like $30, $50 and so on. And then maximum leverages, look for brokers that provide you the opportunity to use little money to move much money. Now look out for the fees. Now here you have to compare because there are very many brokers out there and they all have their different fees. So it's good to make a table and compare them. I think even in the group we had once shared a table. If somebody reminds me later, I might see if I can dig it up. Or if you look at our past charts, there is a table of some fees of some brokers. Then also you look at the number of tradable pairs. There are some brokers that will give you pairs that you can't even trade. So you need to find a broker that provides you with the pairs that you can easily trade anytime. Then spreads. This is very important. Look for brokers that have low spreads because this is your bread and butter. When you're trading, each trade you take, if there's a spread, it will affect your profits. So you might find that, yes, you look at all your trades, they are all profitable because of the number of pips you've made. But if you look at how much you've made, it's not commensurate. So that's because of the spreads. Of course, look for ones who provide technical support. The trading stop thing, again, this is a discussion for later. I don't want to introduce it right now. Look for one that provides easy methods of payment. Bank guarantees, again, that's a discussion for later. We don't need to get into that. Execution time, slippage is a big thing, but slippage normally happens during news or sometimes at night and so on, which means you might be, your trade might have ended here, or like Fridays, your trade has ended here because it was going up, up, and then you wake up and this market, maybe you're hoping it's a trending market, it's a good upgoing market. When you come on Monday, they cleverly drop you down. You might find that now you are starting here. Now, so you've lost quite some pips from here down here. So that's slippage. All right. We will continue. Okay, types of orders. Again, when you're trading, there are very many types of orders you can take. You can take the current market order, just the market execution. That means you take a position at the current market price. So you just buy or sell. That's called a market order or market execution. Then there's what we call pending orders. Pending orders are orders that you take, but you've given instructions when they are to trigger. And often, you can say if the market is going up, you're saying, okay, fine, I will, when the market reaches here, I want my whatever to trigger, my trade to trigger. That's called a pending order. Or if it's going down, the same thing. You're saying, right now, I will wait until this market reaches here, and then I want it to trigger. So you do that when you've already looked at the market and you've analyzed it. If it's going up again here, you see, I might say, okay, fine, this market seems to be going up, but I'm not sure whether that resistance there, that this market will actually go through it. However, so if it's there, what I can do, I can set, if this market is going up, I can set a pending order where if it gets there, I want to sell. Okay, and that is what we call a limit, a sell limit. So you set a sell limit here. Okay, so the market, as soon as it reaches there, touches there, or triggers there, then you get in trade to go down because you've assumed the market will come down. All right. But if your market was here and you're still going to go up, you want a pending order. So you come here and you do like a buy stop. So as the market comes up, 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 when it gets there, you want it to go up. So you're doing a buy, and you tell it, if it gets here, I want it to exit, and I've made my profit there. And while that is happening, then it triggers your next trade, which then will bring you down. So you can do whatever you want to do. There's so many different combinations you can do. Now, in the interest of time, I think I need to give you guys a chance to ask questions. I see most people who are here usually are almost the same people that normally come. So I will give you a chance to ask questions. Most of these are already on YouTube. So if you feel like you need some more information, please go to YouTube and you can get a lot of the things I'm trying to discuss. All right, I'll stop here and allow for questions. All right. Any questions? Is there any question? Yeah, just 2 minutes, 2 minutes. Yeah. Any questions? I don't see any questions. All right, then we shall call it a night. And there is a recording of this and previous videos on YouTube. So I will send a link of the first part of the class on YouTube, and then you can watch this same class and all the other classes in details. Okay. And if you still have more questions, please feel free to send me a WhatsApp question in the group. Sawa sawa.
Thanks, Boss. Thank you very much.
Okay, kwaherini. Thank you for coming.
Thank you.